A.J. Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 127 of the AJ Brown Show. Today is April 5th, 2024. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. AJ, I feel like we're getting off to a hot start with quarter two. There's a lot going on. The markets are starting to move. We got some really good data yesterday. We had some market movement. We got some data today. We had some really good market movement yesterday. Where do you want to begin the story of this week, the beginning of the quarter? What are you feeling? What are you thinking?
Yeah, I mean, everybody's on their toes, aren't they? They're waiting to see what's going to happen with the economy. I mean, it's pretty much a carryover from quarter one, except I think that just nerves are on edge a little bit more starting this week.
And has this been driven by, I'm just going to take a guess, the rhetoric from the Fed yesterday? That was a pretty big move that we haven't seen in a matter of weeks.
Yeah, there's been a lot of the different Fed presidents speaking. Some of them are towing the line that as inflation starts to tame, that rate cuts are in the future. But there's been quite a few people starting to pile on, and most respected would be the Minneapolis Fed chief, Neil Kashkari. Neil hinted that he's not ready to make any rate cuts if there's no, interest rate controlling in the future. And that has been kind of causing different investors to wonder what the heck is going to happen next. But I almost think it's okay that the Fed keeps us guessing. It's this last 20 something years of Fed transparency that has been the most unpredictable. Like when the Fed gives us hints that things are going to happen. There was a point where the Fed didn't have quarterly press conferences. In fact, the Fed didn't even, face the public. That's been kind of a newer thing that people have become used to. But when the Fed used to operate behind closed doors and we would only find out about policy changes, when they happened, that was when the Fed was able to better control the economy. So I almost wonder, do we need to know what the Fed's going to do next? Is there, all this expectation? Is it really that good?
I assume that if we were to look at the futures market, that's going to give us the actual answer, because starting in Q1, or at least going into the beginning of the year, there was a lot of optimism in terms of we're going to get all these rate cuts.
Mm-hmm. They were thinking four. They were thinking a whole quarter, a whole point drop by the end of the year.
And now it's down to two, which would keep rates still relatively high over I don't know, 10-year span, right?
Yeah, I mean, if you listen to Kashkari, he's talking about zero. But I was looking over here at the CME Group's rate probabilities graph. So May, pretty much expecting no change May 1st, right, when they meet again. June, we're still expecting, and it's kind of half, but we're still expecting a rate cut in June. And the numbers, let's see, last week it was about the same as it is now. About a month ago, it was a little bit higher, but 50-50 chance that we'll get a rate drop in June. By July, we're expecting a rate drop. So if we didn't get it in June, we'll get it in July. Pretty much, I'm still seeing by the end of the year that folks believe that there's going to be a 3/4 point rate drop. But those numbers are getting a little bit lower than what they were. But if you look at this bell curve, yeah, we're expecting a 3/4 point drop. But the curve has flattened, and it could go further or not as far.
And this was the main primer for yesterday's pullback, which I mean,
That and
the-
probably the aggressiveness going on in the Middle East is kind of getting investors a little bit upset, especially when it affects oil prices.
and so if we pull up the S&P, it seems as if we kind of broke out of that trend line, at least as of yesterday and today. This morning, we got some more pretty essential economic news, which is kind
The employment numbers.
of, so we could touch on that. But looking at the breakout, I mean, that's a little bit out of the norm, or a little bit more extreme to the downside comparatively. So maybe there's a top forming.
I mean, my indicator, so you don't see any of my arrows, right? But that's because I've got a filter on in my arrows. So if I take a look at my little indicator that all of you can go download for free, this is an indicator specifically for analyzing the broad market and determining when we get tops and bottoms in the broad market. I call it my confirming moving average indicator, right? This is one of my freebies. And if I open it up here, what you can see here is I've got these two filters on it because I only want to know if there's a top or a bottom forming in the market that's substantial, not like, fly by night. So if it's just a one day thing, I don't want to know about it. So put on a filter. And if it's just a little bit of a crossing instead of a significant crossing, put on a filter. And so you can see here, here's what's really telling us if we're going to have a crossing. And so you can see I actually got a crossing indicator right here on April 2nd. There's the crossing right there. But I didn't get my arrow yet because it just hasn't been, a significant enough crossing. It's been kind of one of these shallow ones. And it almost looks like it's going to cross back without actually giving us a significant top being formed. But I've already factored in that, yes, today we're seeing a little bit of bargain buying, but I'm factoring in that we're actually seeing some sell off and that my signal will appear pretty soon. And so with that said, that would mean that our top actually happened at the end of March, right? March 28th. That was when we had our highest close. And so Sip, if I wanted to analyze it further, and I did assume that that was my top, let me overlay some of my drawings that I've been doing off the side here. So you can see I always apply these rulers. And so I want to now pay attention. Let me see if I can pull this up a little bit easier here and spread it out for us. I now want to pay attention to where we bottom because this will tell me what the rest of the year brings. Right? If I can pull back to this range between about, and you guys who are watching the show, you may want to write down these numbers. If I can pull back to this range of about 4,905 to about 5,040, I'm just rounding here. If I can get into that range and then, head back up, that would tell me that, hey, this uptrend that we've been seeing for the last 6 months is going to continue. And 2024, they're going to drop some rate hikes, yada, yada, yada. This is going to be a strong year for the market. If indeed we fall between these two levels, 4,555 and 4,905, I'm actually excited for us premium sellers because this is going to tell me that the market's probably going to go sideways for the rest of 2024 and probably into 2025. Just kind of take a moment and stall for 18 months or so. And so premium sellers, that means that the only way you're really going to make money is if you have those premium selling strategies under your pocket. And then, of course, there's the off chance that we dip down below 4,555. That would tell me, of course, that, hey, we're not going in for a soft landing. We're actually going to start seeing some recession and some down market for a while. So I'm paying attention closely. First of all, that we actually get confirmation that a top was found on March 28th. But more importantly, where do we find the next bottom?
Yeah, and I love the retracement colors that you use? Because we've referenced that a handful of times. Um, do we want to run through the employment numbers a little bit because
Yeah.
they do seem very optimistic? All the news that I'm seeing is jobs are up, the economy's strong,
Yeah.
unemployment is down. Is that your sense?
Yeah, I mean, sure enough, these numbers that we're seeing here for payrolls going higher than expected and not getting any substantial revision down for February. I mean, that's great news for, the employment situation. And of course, unemployment dropped as well. Sometimes these two different data points don't agree, but today they agreed, which is good because these data points are generated two different ways. So it's really neat when you see this kind of the data from both sides giving us good news. Private payrolls are up. Manufacturing is flat. That's not what they expected, but manufacturing, as much as there's a lot of rhetoric around bringing manufacturing back to the States, the States is really just a services business these days. Participation rate, 62.7%. That means more people are getting back into the workforce. That's great. More people are working long hours, and the earnings is right where expected. So this is actually really a positive as well, because it's saying that, yeah, more people are getting jobs, but we're expecting them to get this pay increase and nothing more. If this number was higher than expected, then I would be more excited about possible, the rates not dropping, right? If this started to go up higher than expected, then the Fed would say, oh gosh, we need to keep rates where they are. But because it's coming in at expectations, I'm not too concerned about the Fed raising rates. Now, people might come back and spend the weekend dissecting this and come back Monday and say this good news is actually, bad news for the markets, because the Fed may say that this is too aggressive and may decide to hold off on rates. But I think that this is just positive news for now. And I think that it's not going to, in the long run, affect what the Fed decides to do next. So I'm actually happy. I'm happy for the mainstream folks, right?
Yeah, it seems as if the good news today, well, it is the market
It's not
is
too
up.
good.
Yeah, and it kind of validates the what you said with we may have a pullback on the S&P and then kind of just drag through the rest of the year, which, like you said, is great for premium selling and
Yeah.
using options to allow time to help you make some money. And with
Mhm.
that, just want to give everyone an opportunity to jump into your daily workshop where you reveal these specific strategies and approaches to how to use premium selling, time, the kind of slow, sluggish market that we may be foreseeing to your advantage to take advantage of some moves and really enhance your portfolio. So the link to that is in the chat. I'm looking at the chart here. We're breaking out of our trend.
Yeah, here's just kind of a thought for folks. I know that everybody wants to see the markets go up, especially when it's their 401ks and things like that. But for the last, I would say 3 of the 6 months, so from about this period on, we've really not had a chance to recalibrate this uptrend. A lot of times you need to have a little bit of selling. We call that a little bit of distribution in order to keep the accumulation happening, right? And we haven't had that. So, what instead we're having is a lot of FOMO. A lot of folks jumping into the market that otherwise probably wouldn't have gotten into it if it wasn't for all the hype. And I know this just in my circles of folks that are more traditional, letting other people invest their portfolios into mutual funds and things like that. They're telling me at different like cocktail parties and stuff like that that they're getting into Nvidia, they're getting into Tesla, they're actually dabbling in the markets, and this is money that otherwise wouldn't be in the markets. And it's almost like we have to have a moment of reckoning where a lot of those folks who have been making money, like one guy was telling me that, oh, I made a whole bunch of money on Nvidia, and I was thinking to myself, well, that didn't really require much skill, right? Anybody was making money in Nvidia. So it's almost like we have to take a moment and get all that money to be circulated and either internalized or rejected. That's going to just take a little bit of moment of sideways movement so that money gets processed correctly through the market forces before we see any more of concrete gains, right? Especially with the Fed doing quantitative tightening and all that good stuff. There's just got to be a moment of reckoning. And so I don't think that's a bad thing. I think that, we might be in for like 6 months to 18 months of kind of sideways movement. I think that's where we're heading. And I don't think that that's a bad thing for the long-term investor at all. You just take a, 18-month break here, and then you'll see your gains continue to go up. The S&P always goes up.
Yeah, that's been the trend. All right. So once again, if you want to learn more about those specific strategies, head on over to the link. To the link in the chat. It's there. We're gonna take a short break here. AJ's got some really nice tickers, some nice names to run through. We are streaming live, so if anybody watching has a name that you want AJ to run through, feel free to throw it in the chat. If you have any other specific questions, feel free to throw it in the chat. We're going to take a short break. We'll be right back. Stay tuned.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Not sure if you guys saw that commercial there. I didn't see it on my end.
I saw the opening screen, but man, I look pretty good in that opening screen, so I don't mind.
Yeah, well, you heard it. That's just AJ's promotion. He's swooping in the Tesla. He's going to do his webinar, so head on over there. The link is in the chat. All right, before we go into your topic of the day, which we touched a little bit on last week, I know that we've had a lot of viewers. I know a lot of people that I know have chatted about this Donald Trump stock, right?
Oh, yeah.
DJT. Basically he took his Truth Social app public, and there was some news this week that really drove the stock price up, and then they came out with earnings, and
the fundamentals aren't that good, are they?
Not at all. They lost 58 million
on 2 million of revenue.
2 million of revenue, and have a $5.744 billion market cap right now.
Doesn't make sense.
Does it have to make sense, AJ? I mean,
well, I think nowadays more than ever, when times are really good, like I'm thinking .com boom, and just recently after the COVID, everybody moving in and figuring out their own home businesses and stuff, where you could have businesses that had potential and people would invest in them. But I think there's also been a reckoning here where investors are getting more scrutiny or being more, they are scrutinizing more their potential, where they want to invest their dollars. And I think investors right now want to see that a business can stand on its 2 feet. So I think there was a lot of hype around this. And I think a lot of folks who, buy into the Trump message were excited to be investors in the Trump fortune. But man, the fundamentals just aren't benefiting that. And I'm seeing that a lot of the bigger investors are, I feel like they were doing almost like a pump and dump sip. They were getting in early and then letting all the people follow. They kind of created this pop up in price, and folks saw that, and they also had this added attachment to the Trump name, and so they went ahead and put their savings into this. And then as soon as those big guys saw the price increase by creating that momentum or starting that momentum, they started to take their distributions. And we've only seen in the last 3 to 4 days pullbacks in this stock, and I'm not expecting it to stay ground. In fact, I've actually said that it'll probably go back to its pre-value of around $17 or less. So we'll see.
And so if because people are entitled to their own opinion, if
Mhm.
I was under the assumption that this company is gonna fail miserably at the end of the day,
Yeah.
how can I, as an options trader, make money off of that? Is it possible? Are there options trading?
Yeah. So number one, you could short the stock, but if you wanted to get into the options world, let's take a look.
And before you say short the stock, I'm just reading a headline here that says Trump Media is the most expensive US stock to short. That's the headline that I'm reading.
Yeah. Yes. So, I would go out in time, probably looking at these September or October options, and I'd look on the put side of things. And there's a couple of different ways you could trade puts. You could do the more stable way, which is buy one that's in the money. What you're looking for is maybe there's a lot of, I'm looking at the numbers right now, and there sure is a lot of implied volatility in here in the put side of things. I'm looking to where we lose the extrinsic, and you have to go so deep in the money. That basically means that there's a lot of folks doing exactly what you're talking about. They're loading up on these put options because they really think that there's not much future here. You can see open interest. There's not too many people trading on this, but you can see that the people who are trading on it are totally expecting it to kind of falter. I might buy like a $50 put. You're spending about, wow, they really have driven up the price of these put options. There's so much demand. Do you see this? The $50 put is going for $32, $33. I mean, gosh, the stock itself is only $42 right now. So that means there's a lot of demand for this option. Even the at the money option, for an option that's not quite worth anything right this minute, for it to be trading at half the price of the stock, is trading at about $24. That means that, gosh, people expect it to be in the money pretty soon. So there's a lot of expectation already in the markets that this stock is going to fall.
And in order for you to buy that put, someone has to write it and sell it to you, right?
Yeah, and that's where this kind of, they're looking to make their money on this. So that's why you're seeing this large price. They can do that, right? They can totally sell it for this high of a price, even though it has no value, because people are willing to pay for it because they think it'll even go higher.
Yeah, very interesting, and maybe a little late to the party, right? Maybe these numbers have just recently started to get a little bit more active. Back when it was $17, it looks like
I
there's
mean,
a
you're
much
only
calmer
late to the
environment.
party if the downturn is done, but I'm not sure. I mean, yes, there's definitely this level of support at around $40, but even then, Sip, I don't know, man. I think that there was a lot of hype, and with the actual transparency of the numbers being released, I think that we're going to break through this level of support, and that's what a lot of people are banking on. I think that this is a very speculative play, one that I traditionally would not be focused on. But if you do, want to bet against this, I think that your bet is, will this level of $40 hold or not? And if you bet that the $40 is not going to hold, then yeah, there's still room for you.
It's crazy to think that there's a stock or an investment that's directly tied to a presidential candidate, and that the results of that could sway this stock name one way or another, right? I mean,
Yeah. Yeah,
um,
it totally could. And so that's, again, I don't like to join into anything that has, is in the news. That's just not the type of predictable income. But if you had some fun money and you wanted to kind of play, your probabilities on this, you could do it a couple of different ways depending on what you think the outcome would be. But I urge everybody to just use money that you're willing to lose, because it could go any way.
and at the end of the day, there is a product. There is the Truth Social app, which I don't know if you've ever used, AJ, but I've used it. It's basically like a Twitter, and it
I
was
was gonna
funny.
say, isn't it like Friendster or something like that?
Honestly, it's more the experience is closer to Twitter than anything I've ever seen. Like the scrolling and the commenting and the characters, and
So
it
it's
was funny.
Twitter.
Yeah, but it was funny because it was like Donald Trump was like, "Well, I'm an important guy, so they say I'm an important guy," and you'd think that you'd want to hear from the important guy on the social media app that he's going to be talking on. Like that was his case for it. It's like, okay, well, I guess you know, uh, we'll see, we'll see. I
We'll
just know
see.
that a lot of people are
Doesn't
asking.
he has a huge portion of stake in this company, I think.
Yeah, almost half, like 75 million shares out of 136 million outstanding. So
Yeah, and I don't think that he has the ability to trade them yet. I think that he's kind of stuck himself. So sucks.
he's looking for a way to pay for those settlements. And,
Mhm.
this is America, and this is capitalism, and this is the process by which we allow people to do that. And so if you
Yeah.
want to invest in Donald Trump media, you have that capability. If you want
And
to,
it might be yet another reason why he's extra motivated to win the presidency, because that'll make this stock go up and it'll make his portion be worth something.
all right, let's dig into our topic of the week, topic of the day, topic of the week. I know that when we were looking at the chart, kind of creeping up, the activity was a bit limited. But since yesterday and since we broke out of that channel, it seems as if the activity is picking up, and you kind of can gauge this by the VIX. And
Mhm.
we had an opportunity, or you called out last week. It looks like
Mhm.
there's a little extension. The VIX, what are you thinking? What are you seeing?
Well, so the VIX did do like we said. And so for the last 2 weeks, we were telling people it's time to go ahead and place that new hedging trade. And I got a lot of questions if I could remind people how that works. So I thought for our topic of the day that I would kind of dissect that a little bit. So, last Friday after we kind of issued that, I added to my holding of my VIX. I call it my portfolio hedging position, because this is a position that if your whole portfolio goes to heck, this position will go really well. And so let's talk about just some of the basis here. The idea is that the VIX is a measurement of fear versus confidence, right? If you're confident, the VIX goes down, and if you're fearful, the VIX goes up. And traditionally, if we look at the VIX over time, I'm going to show you the VIX since it's been calculated. So this is from the mid 1980s. The VIX goes up every time we have something happening that's very fearful, right? This is the whole .com area. This was the 2008 crisis. This was the pandemic. And you'll notice that it's just a psychology experiment, Sip. It's like we only as human beings can be so confident, but we sure can be fraidy cats, right? We sure can have a fearful moments that far surpass ever the amount of confidence we get. And that's kind of the basis of this trade. So if I bring us back to the more current data, the idea is we know that the VIX is starting to trend up back towards the kind of more fearful side. We know that the mean of the fear, meaning the average of the fear all time, is up here around $19.25, $19.30. So we're still more confident than we have been in the past, but we're edging up on the Frady Cat side. And that even though we're edging up, we have these moments recently where we get more fearful than confident. And we have had this moment of confidence in the past 2 weeks, and we've been saying, place this trade. So what this trade is, I'm going to show you kind of a neat little graph. This is called the risk profile. And so what we do, again, this is along the x-axis. Let me give you some bearings here. This is the VIX price, right? And so if the price goes up, we get more fearful. If the price goes down, we're more confident. We know that, again, the psychology is, or the theory is that we only get so confident, but when we get fearful, there's no limit to the amount of fear we can have. It can really shoot up high. And so what we did was we created this trade between $13 and $16 that if we stay in that range, we basically make the amount of money that we got in the first place, right? And I'll explain that a little bit better in a second. But if the fear does shoot up, we can really cash in. So let me dissect this trade even further for you nerds out there that really get into the option stuff. So it's basically two vertical spreads, and you can see that they look like vertical spreads. This is the profit and loss diagram for a vertical spread. And the one vertical spread is a credit spread, right? So it's called a bull put vertical credit spread. And on this credit spread, I was able to create a credit for 17 cents for each option share or each vertical spread I did. Now they go in lots of 100, and you can do as many contracts as you want. And then to buy this debit spread, it cost me 16 cents per share. So basically, if nothing happens, if we stay between this $13 and $16 zone, what's going to happen is that the credit spread is going to go down to zero, meaning that I made a credit of 17 cents. I won't have to give any of that back. It'll just expire worthless. That's what's going to happen to the credit spread if on the expiration date, this is the third Friday of April, if I'm above $13, that credit spread is going to go to zero. The debit spread is also going to go to zero. The debit spread only goes to full value if it's above $17, right? But at the $16, it's also going to go to zero. So the difference that I got in the beginning between the 17 cents and the 16 cents, that penny, I'm going to get to keep that penny. And that's going to help me pay for all the commissions. In other words, if the VIX doesn't do anything, that's fine. I'm going to have a break-even trade, pays a little bit for the commissions. It's not going to cost me anything. However, if fear takes off and that credit spread still goes to zero, but the debit spread goes to full value, which is $1, I mean, I could make a fortune here, right? It cost me a penny to get in, and I'll walk away with 99 cents, right? You can't go wrong with that deal. That's like 100-to-1 payback. And this purple line represents the cooking value, like the value that it's worth as we get closer to April 17th. So even if I wanted to exit this position early, right, where are we trading on the VIX right this minute? Let me take a look. The VIX is currently at $16.14. Yesterday, it hit a high of $16.92. So if we come back to our graph, $16.92, I mean, I'm talking about a pretty almost halfway, if not further, towards that $1. I could get 50-to-1 on my investment if I wanted to exit it early. If I think that there's going to be more fear in the future as we approach, this is what happens to that purple curve as we get closer to the expiration date. You notice how it's getting closer and closer to that blue line as we get. I'm basically simulating what happens as each day goes by until finally on the expiration date, it'll be that blue line. So it's all saying that this is a great trade for you to put, a portion of your portfolio in, maybe 10%, 20% in. If nothing happens and your other trades are fine, then great. This position will just be a break-even trade. But if something happens where fear takes over, maybe your other positions take a little bit of a hit, this thing's going to pay back 50 to 100 to 1, right? And so that's the whole idea behind this trade and why we talk about putting it on every time we're near a bottom. Right now, it's worth so much more than what it was when I paid for it like 5 days ago.
Yeah, and that line above is an average for how far back?
Since the beginning of the VIX. So pretty much we pay attention to that mean. It's called mean reversion. If I go back, this is the line since the beginning. It's averaging all of the prices since the beginning of time.
And so essentially this is a great defensive play, right? Like if you have a little bit of concern that the pullback on the S&P or just that the overextension to the upside has some room to go, this is one of those that will kind of counter any of those long portfolio names that you might have that, imagine like an NVIDIA, right? You've been really doing well holding NVIDIA, not doing much, but when we start to pull back, those gains are going to lessen. This is a way to kind of make up the difference.
Absolutely. It's like we put most of our portfolio into positions based on predictability, based on this is what we think this position is going to do, and we're going to invest in it. And so when we see the VIX go up, basically that means that the predictability is going out the window. So by putting this trade on, that if the predictability stays where we expect it to be and the rest of our positions do what we expected them to do, this trade will be a break-even trade. But if all of a sudden something unpredictable happens and the rest of our positions are in question, this trade will go ahead and hedge that. This trade will go ahead and shoot to 50 to 1, 100 to 1, and offset anything that might happen because of the unpredictability. So this one profits on the unpredictability.
And how much roughly does one need to buy a contract of the VIX? Like what kind of capital commitments would you need to make in order to kind of hold on to that?
Well, so again, because of the way we structured this, right? Because we went ahead and did these two spreads at the same time where one was offsetting the other, you pretty much, because of the way that they're constructed, you need to be able to offset this credit spread. And that's all the, that's all the income you need. So we're talking about 83 cents times 100. So $83 per contract. So a minimum investment of $83 is pretty much what you'd need to be able to afford. So I'm telling you, like just about anybody's even small dollar account can do this.
Yeah, that's crazy to be able to put on a position for as little as $83 to.
And that would be $83 that you have in your account. When you put on this position, what's going to happen at first is you're going to get, $1 or $2 put into your account that you can use towards commissions. And then April 17th rolls around, or if you close the position, it's going to be worth a lot more. In fact, let me just drop these down to $1 and I'll tell you where we're at right now. I mean, not $1, but a contract. Give me 1 second and put this one down there. So as of right now, if we're trading here and we're looking at this roughly around $16.50. So we started off by getting a credit of about $1 per contract. It's currently worth $43 if you were to liquidate it today.
Yeah, and then 10 contracts, times 10, 20 contracts, it starts to add up and so
But for each contract, you need to have that $87 in the bank. Otherwise, they won't let you do it. That's the weird part, right? So you need or $83 in the bank, so they won't let you do it. So if you had $830 in the bank, they'd let you do 10 contracts, and those 10 contracts would be worth $433 right now.
Awesome. So, a great opportunity for any smaller accounts that are interested in taking advantage of some cool option setups.
Yeah.
So, thank you for that, AJ. All right, we've got about 20 minutes left in the show.
Cool.
And so, we want to run through some specific names, some specific examples, and try and get the folks, the viewers, set up for success with some potential premium selling options trading strategies. And so let's dig into your pick of the week. Everyone's always looking forward to this. This is a name that we've touched on in previous episodes, and that's Norwegian Cruise Line. NCLH is the ticker symbol. I don't know if we would consider this a boring name, would you?
Well, what's good about it is they're consistent. They're consistent at the type of news that they get in. They're consistent about ups and downs. And so I'm actually to the point where I'm ready to do, or I have been doing some shorting of Norwegian Cruise Line. So you can see Norwegian Cruise Line has been trading. There's a level of resistance around this $21 mark. I'm actually going to identify that for everybody on the screen. And so I'm looking at this range from about $16 to $21. And we kind of topped out. Let me go ahead and I like round numbers, SIP, so I'm just going to go ahead and force my lines to be at $16 and $21. Now, when I got my signal and my follow through, right, this was my signal bar. You can see my magenta arrow. This is my free indicator that's called the confirming MACD. I'm using the fast MACD settings using VWAP as my seed value. When I got that signal, I went ahead and shorted Norwegian Cruise Lines, or there was actually this great option substitute. It was the Norwegian Cruise Line January 2025 leap. So January 17th, 2025 expiration date, the $27.50 put. That thing was just ripe to be bought about 4 days ago. So Monday, Tuesday of this week. If we have a little move up above $19.09, I would say that you could add on that position. That just goes to show that this strategy isn't, you don't have to hit the signal perfectly. You have to, more importantly, hit the price target. So if we get a little bit of gains today above this $19.09 that you can see on my chart, I could add to that position. Or if I didn't get into that, I'd buy some of those puts or short some of this stock. And this is preparing me perfectly, SIP, for when we get down again below $17.90, somewhere around this $16 range. When I detect that a bottom has been found, dude, I'm going to sell some put premium and buy some protective calls and start that income generation train rolling my way. So this is one of those predictable stocks that I feel good about that. I also like the fact that I'm in a short position against the underlying, because if we don't stop at 16, if we do have some, upsets and it goes even lower, I don't have to sell premium. I could actually make this into a directional position and just basically liquidate it when it gets to its bottom. So I'm set on all fronts. Again, it's a little bit late if you didn't do it earlier this week, but if it pops up above $19.10, you'll have a second chance to get into the same position I'm in.
Awesome. That's like a $4 move, $3 to $4 move there to the downside with even more to the downside if needed. So definitely like the setup. That is
It's a great setup. I'm
Norwegian
stoked
Cruise Line.
about it, dude.
NCLH. All right, that's AJ's pick of the week. Let's move into our speed round. We've got some names from across the country, across the world today. Starting with Diane from Lake Louis, Alberta, Canada, interested in Cameco Corp, CCJ. I think this is a brand new one for the AJ Brown Show.
Yeah. Lake Louise is one of my favorite places, by the way. Beautiful hiking in the summer, beautiful skiing in the winter if you're into that. Also, it's a mecca for folks from Australia who don't get the ski slopes that you can get in Canada. And so if you want to see really beautiful people from Australia, you can go to Lake Louise. With that said, I like really beautiful people. I like everybody, but I like pretty people just for my eyes. I don't know what I'm saying. The scoop is this is a company that's investing heavy in uranium. There's this huge resurgence of focus on nuclear, especially nuclear fission. The more evolved of the two nuclear sciences, because nuclear doesn't contribute to global warming, right? It may contribute to some other problems, but it's not global warming. So all of a sudden, nuclear was dead 10 years ago. It's definitely revived big time. This company is poised to benefit on that. The only thing is that there's been a lot of, both in the public sentiment, nuclear has still got some negative connotations, because even though it's very rare that there's a nuclear disaster, when there is a nuclear disaster, it kills a lot of people, right? Or it potentially can kill a lot of people, both in the short and the long term. I think there's only been 3 or 4 really big nuclear disasters in our history, but they've all been like bad news bears. So public sentiment is never positive around nuclear. And then in addition, there's been so many regulations across the board with nuclear that it's hard, it's difficult, which means it's expensive. So there's headwinds against nuclear. And so as much as there's excitement about it, there's also always going to be those headwinds. And so you wonder, will Cameco have, at least in the short duration, a positive future? Let's look back in time there a little bit. Let's look at 2 years. So yeah, okay. They were, and it looks like I actually looked at Cameco a while ago, because I can see my telltale drawings here, and it looks like they had a moment of appreciation. I call that a step function increase in price. But let me go back even further. I'm going to go back. Let's go back 10 years. These are now, instead of daily bars, these are now monthly bars. And so it's interesting. So Cameco goes sideways, and then it has like a little bit of time where it goes up, and then it goes sideways, up. So if patterns repeat themselves, I think we're in for a little bit of sideways motion. So now let's bring us back to the future. So, or the present. Yeah. So $50 looks like this is our new normal of resistance. It looks like maybe we've got a $41 level of support, maybe $42, $41.50, something like that. Let me draw that in. And if you wanted to trade this, this might be a time to look to short it. Short it because it's at its top of its channel, right? You could either short the stock, or you could do like I did with Norwegian Cruise Lines. You could find a deep in the money, far out in time put option that would act as a substitute stock. And so if you short this thing right now, and here's my one caveat, I would make sure that a top is found. I can see tops being found over here. This was like a double top. I haven't gotten my signal yet for a top to be found here. I would download my indicator and I would use it to find that top. But as soon as I find that top, it is oversold. You can see here with my RSI on steroids that we're in this overbought territory. I said oversold, but that's just because I have word retrieval issues. Overbought. And I would see shorting this, and then I'd be poised as soon as I get down here and identify a bottom to sell put premium, buy protective calls, and start the income train. I like this. I'll be looking at it for myself.
Yeah, definitely a good name to keep on the watch list if you have a knack for any of the material or the minerals, right? Gold's been in the news. This one's definitely isolated to uranium. But the support and resistance levels there are lining up very nicely. So thank you
Uranium.
for that. Sure.
Sorry.
Thank you for that, Diane. All right, moving on to our next name. This is Richard in Naples, Florida. And I'm shocked that this company's still even around. This is Groupon, ticker symbol GRPN.
Are they still around?
I can't imagine the last time I've heard anybody using this, anybody going to the site. So
boy, they really messed up not selling to Google, didn't they?
Well, let's see. I mean, Google tried to buy them for like $4 billion. What is their market cap now?
Probably 20 million, something low.
362 million market. That's pretty darn low.
Yeah. They missed out on a tenfold, and they really thought they had something unique, but it was just coupons. Okay, trading at $11.40. I see what you're seeing. You're seeing a bottom. Let's look back in time. We're going to do the same thing that we, this might fit my definition of boring, right? Boring and no longer in the news. I see that since, August of last year, we've been in this horizontal, sideways, kind of choppy movement. I'm not sure I could get behind the $18 range, but I think that the $16 range is more of a tested. Let's go ahead and do what I like to do, which is make round numbers here. So let's go $11.50 for support and go $16 for resistance and see what we've got there. I'll bring us back. I'm noticing that my sideways channeling theory on this pattern makes sense because look, my RSI equally bounces between overbought and oversold. So I think that this might be a nice premium trade for us. Like Sip and I both were surprised. We didn't even know this company still existed. So it's definitely kind of boring and off people's radar. If I get a signal, I see that I got a signal on April 1st and I didn't get any follow through on April 2nd. And then on April 2nd, my signal was canceled out. So I would wait for a signal like I got back here on January 25th. On January 25th, I got a signal in the evening, and on January 26th, I got follow through, and that turned out to be a pretty good trade, right? If you went long on Groupon, and then right here where you got this signal, if you waited for follow through, and it looks like follow through probably came right here on this day here, you sold your premium, you bought your protection. I mean, you're in Fat City right now. You've created an income generating stock that's too good to be true. Or even if you bought and then just sold at this level, that's great too. You got a nice piece. So I see you're trying to recreate that, and I don't see why that wouldn't be possible. So, we've got the oversold condition. This time I'm right with my labeling. We've got the oversold condition. Let's wait for this lagging indicator in order to kick in before we go long. But you could buy shares of Groupon stock. I would buy it in lots of 100 so we could sell premium against it. Or you could buy some deep in the money, far out in time call options. Let me see if the option chain on Groupon is still even exciting. I would probably, if I was buying substitute options, I'd probably go out to the January 2025 at this point. They're trading every couple of bucks, so that's positive. And I'd be looking for a call option My percentage of intrinsic, maybe this $5 call option. Um, it doesn't look like it's heavily traded, but there is some open interest. And so, yeah, I'd probably put something out there. The mark price is currently at about $7. So, put it out there. See if you can buy this for $7. The stock is trading at 11. So you've got a little bit of leverage, 2-to-1. But again, don't do it till you get your signal, right? You don't want to trade this till you get the signal. But I could see either buying the stock in lots of 100 or buying contracts of those call options we just talked about, and then allowing those to appreciate. If you get above 17.75, consider just taking the money and running. If you're still reversing around $16, start that income money train like we love to create.
Yeah, and this has definitely been a name that's been moving. I'm just looking at the yearly range, which is 289 up to 1956. So a lot of movement. They've been losing money ever since, but they've been losing less money.
I was going to say less
quarter.
money quarter over quarter. So they must be doing something right, whether they right-sized their company or whether they've found out some new income strains. I haven't, like you, Stip, I haven't heard this name in like at least a half a decade. And so I'd have to dig a little deeper as to how the company's being run. But
Yeah.
this is the type of stock we look for in order to sell premium on. Plus, it's at a great price. So even if you have a smaller portfolio, you can afford to do these income generating strategies with this type of stock.
Yeah, it definitely hits that price point too. 11 gives you some flexibility in what you can do. So thank you for that, Richard. Hope Groupon's treating you well down there in Naples, Florida. That's a nice, relaxing place to be, to utilize their activities. Because I just went on their site and it's like spas and golf and this and that. So very, very local oriented, I think, touristy type of events. All right, moving on to our third and final name in our speed round. This is Brian from Springfield, Illinois. Interested in Trupanion, ticker symbol TRUP. Don't even know what that is, AJ.
Oh, Trupanion is a company that likes to sell pet insurance, basically. So, insurance, health insurance for your kitty and your doggy. Okay. Interesting. This is an interesting pattern. Again, I'm going to go back in time and look at a bigger picture here. This is the last 2 years. So definitely, as we were coming out of the pandemic, people were paying attention to their pets, and now Trupanion's kind of right-sized. They also don't seem to be making money, but they're losing. Well, they lose about the same every quarter, it looks like. This last quarter they did, they only lost a nickel per share. So they're trying to make it work, right? They're trying to apply. I think one of the issues is insurance companies, at least in the States, are heavily subsidized by the government, and that's not the case. So you have to make your insurance company actually work. So the payouts on pet insurance versus the pay-ins, right? I can't speak to any of that. I don't insure my pets. I just don't. And they live fine. With that said, $23 is maybe where we've got some support. And it looks like we've targeted out at resistance at like $30. So that's a nice spread. The signals, I'm trying to look to see if I guess the signals are clear enough. They look a little muddled. I'm getting these false positive signals pretty often. So that's something to take note of. I would say, and I'm looking over here, I would prefer to see my RSI oscillating between oversold and overbought. You can see that the RSI is kind of just staying right in the middle zone. This is boring. Would I want to turn it into I think that there's better symbols out there for turning into our income trades. I think that this one could get a little bit complicated to trade. I don't think it's impossible, but I think that, we'd want to see us get down to this 24, even between 22 and 24, get ourselves a buy signal. And here's my tips for you. Plan out your trade, right? And that's what I teach folks to do in my program, is how to do the pre-planning. And specifically what I want you to do is analyze what the worst case scenario of your trade will be. If everything went wrong, how much would you lose, right? And then take that amount and figure out, what's the worst hit you want to have to your portfolio. And therefore you can right size this position so that whatever loss that you have to this position, if the worst thing happens, if everything just goes against you, that it doesn't go above that limit you have for your portfolio, right? So plan out the trade. And also, when you define that worst case scenario, that usually has to do with price thresholds, right? How much, how much you pay for things. So you can create a plan that not only has the right position size, but also has price targets. So that's going to help you big time. When you go to make your trade, when you get your signal, whatever signal you use, I'm using the Fast MACD end of day signal with next day follow through. If you use something like that, just make sure that your price targets are met. And if they're not, then don't do the trade. And I think that's what's going to be your saving grace to turn this trade into an income generating trade, is having a good plan and following that plan. And that plan's got to include position sizing and price targets. If you have any sort of questions about how to do that, my program is always waiting, right?
Waiting. The link to that is in the chat. So head on over there and sign up. We've got the link to that in the banner as well. So thank you for that. Brian, it seems this Trupanion is as boring as it gets. So if you find an opportunity there, great. All right, AJ, heading into the end of the show here. Q2 is definitely, we're starting to see some action, starting to see some pullback. Anything you're keeping an eye on? Anything heading into next week? Thoughts, feelings?
I'm actually preparing for the upcoming earnings season. I'm starting to look. I'm noticing that people are hedging more. There's more implied volatility coming through. And that's going to play well for earnings season, meaning us option traders have the ability to profit on those implied volatility plays during earnings season. I think this earnings season SIP is going to be a really profitable one for us that know how to use those implied volatility trades. I'm kind of giving our folks a palate wetter for the upcoming shows, but I'm going to be dusting off those strategies this weekend, making sure I'm familiar with them. And that's what I think we're going to be looking at this quarter.
And as usual, we'll be back next week. But in the meantime, if you're interested in learning more about Trading Trainer, some previous episodes, or if you want to just show some love, head on over to one of our social pages. The YouTube is kind of where you'll get a lot of the most recent videos. Hit that like, hit that subscribe, hit that follow button. We truly appreciate it. AJ, thank you once again for your time. Thank you, everybody, for tuning in. If you have any questions, comments, or concerns, go ahead and leave it in the chat. Send us a DM, and someone will get back to you. Otherwise, we hope everyone enjoys their weekend, and we'll catch you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his Investix, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.